प्रेजेंटेड बाय eBix कैश। हर खुशी के लिए काफी है।
Hello and welcome to Business Today. I'm Paulami Saha. Here are the headlines we're tracking today. Nifty ends November series above 17,500 marks. Sensex gains above 450 points led by RIL Infosys. Nifty Bank posts worst series since March 2021. Mutual fund industry rubbishes talk of stock valuations being high. AMFI chairman tells Business Today TV in an exclusive conversation that earnings and reforms back the rise in share prices. Stocks which gave you returns of a whopping 42,000% in just 20 months. Business Today television looks at penny stocks with a Midas touch. Crypto industry warns against a blanket ban, says it will only encourage non-state players, wants regulations to protect the interests of investors and market players. Prices of vegetables and fruits in retail markets have shot up on tight supply due to unseasonal rains in the country. The Aam Aadmi is feeling the pinch of inflation, but why the surge? We give you a 360-degree view later on the show. Prime Minister Modi lays the foundation for Noida Airport. First phase will be ready to handle 1.2 crore passengers in 2 years. Nifty ended November series above the 17,500 mark. Sensex also jumped 450 points led by RIL and Infosys. But overall, it was a weak November F&O expiry. Nifty snapped 3 series gaining streak to end 1.8% lower. Nifty Bank posted its worst series since March, slipping over 5%. But Nifty mid-caps and small-caps continue to outperform. Sensex too registered a 2% fall in the November series. Sectorally, Nifty Pharma continued to fall for the second series in a row. Financial services too posted their worst series since March, declining over 4%. On the other hand, Nifty Realty made robust gains, gaining almost 6% to become the best sector this series. As the Indian equity market witnessed a sharp recovery from COVID lows, there were a few penny stocks, literally hidden gems, which changed the fortunes of those who invested in them. We look at some of them in this special report.
The bull has reigned the stock markets the past 20 months, powering the Nifty from a low of 7,801 on 24th of March last year to 17,600 on the 25th of November 2021, a jump of 125%. While blue chips have given a golden return in this period, the real gems are those penny stocks which have turned their investors into millionaires. Equip Social Impact Technologies tops the list. The agri-biotech firm has risen from 20 paise to 88.05 rupees, a rise of 42,000%. This means 1 lakh rupees invested in this stock has now turned into over 4 crores in just 20 months. IT services and business process outsourcing company 3i Infotech is the next penny stock on the list. Shares of the company jumped 8,104% to 103.25 from just 1 rupee 20 during the same period. Rohit Ferrotech, Digjam, Jindal Photo, Brightcom Group, Tata Teleservices Maharashtra, JITF Infralogistics and Lloyd Steels have also soared between 3,000% and 6,200%. Market watchers believe the common thread shared by all these companies is their financial stability. None of these companies had troubles usually associated with penny stocks. Additionally, liquidity measures taken by the government, low interest rates, and boosters announced for manufacturing, telecom, infrastructure, financial, and social sectors helped prop up the bottom lines of many a company. This report filed by Rahul Oberoi for Business Today TV.
Are the Indian markets overvalued? Are the shares too expensive? Is it time to cash out your holdings? These are the biggest questions investors want answered today. So Business Today television managing editor Siddharth Zarabi asked these questions to Chairman of the Association of Mutual Funds in India, A. Balasubramaniam. Listen in.
Whenever the market is being driven on the basis of the liquidity and the lack of opportunities to make money in the other segment of the market, therefore increased level of participation comes. At the same time, the step that is being taken by various government regulators are all pointing towards driving the growth to the level at which India deserves to grow. And all such things generally drive the market sentiment. Therefore, the valuation first increases, it goes up to the level to which probably one will start assuming that valuations are high. The high valuation always backed up by the earnings coming back. I would assume the way, I think once the economy gets opened up, I would assume to most of the companies the result starts coming better. Therefore, it's too early to come to a conclusion that valuation is high, therefore one should get worried about it. At the same time, having seen cycles in the past many number of years in a similar kind of situation, clearly one has to of course keep in mind what kind of quality of companies one buys and whether one is doing speculations or making investments for longer term, and time period for which making the investments have to be taken into account while making the investment decisions, and not to look at the short-term benefit that normally market tend to offer. At the same time, it can disappoint the short term as well. But as long as one doesn't get caught in that cycles and stay confident and with reasonably good amount of longer time period for investment, then it should be okay.
I want you to talk about cryptocurrencies. The key feature, one of the key features really that we have been seeing is a lot of young people investing in crypto, and they've taken to it just as they take to newer technology much easier than people who are more in the age curve. What is happening here? What are your thoughts about the crypto investment mania, if I may use that word?
One has to actually wait and watch as to how this will shape up. Clearly, I think there is a regulators in biting, and how the regulators are going to see it in terms of this as a currency. This is something interesting to watch out. And I would assume as the regulation comes in this place, either in the form of a taxation or in the form of making it as part of the payment mechanism systems, then one has to see actually how it behaves and how many of them are going to survive and how many are going to actually come out very clean in this space.
Individually speaking, are you in favor of a complete prohibition or a more nuanced regulated approach where it is perhaps obviously not treated as a currency but as a taxable asset like maybe other commodities?
See, anything which is there is an element of money is being made, or anything which is has got a wider acceptance in the form of participations, definitely I think regulation is a must. We have seen in the past that like many kind of platform companies in the country, they all came in, then the absence of regulation, the money investors burn the finger. At the end of the day, if investors have to be protected, whichever way it is, either in the form of losing money or making money in the form of speculation, it actually leads to the regulatory requirement for such kind of product. I think taxation is a function of the regulation. I think as the regulation comes, the taxation also will follow. I think that's something I think one has to probably have a deep understanding of this. Ultimately, I think each of the government probably have to take a call as to whether at all these kind of instruments have to be recognized, and given the fact that currency, the ownership with the central banks globally, therefore how does it differ from that, and that's something once it's accepted or maybe differentiated, the regulatory framework coming in with the proper taxation structure will bring in the right level of balance on this.
Some of the biggest foreign investors in Paytm have used the plunge in its share price to accumulate more of its shares. Agency reports say BlackRock and Canada Pension Plan Investment Board, who were among the anchor investors in the public issue, have bought more Paytm shares on Tuesday and Wednesday. The share plunged as soon as it was listed in the exchanges last Thursday, and the fall continued till it touched a low of 1,000 281 rupees on Monday. Since then, the stock has recovered to close at 1,785 today. The stock is still a distance from its issue price of 2,150 rupees. FMCG majors HUL and ITC are hiking prices of select items including soaps and detergents. HUL has increased the price of Surf Excel Easy Wash by 3% for its 1 kg pack. The pack will now cost 130 rupees. The company has also raised the price of Wheel Powder's 500 gram pack by 2 rupees, thereby increasing it from 28 rupees to 30 rupees. The cost of Rin Bar, also an HUL product, has been increased by 5.8% for its 250 grams pack. The FMCG giant has also hiked the price of Lux soap by 21.7% or 25 rupees for its 100 gram multi-packs. Meanwhile, ITC has raised the price of Fiamma soap by 10% and Vivel by 9% for their 100 gram packs. Incessant rains have wreaked havoc on vegetable prices, with consumers feeling the pinch of inflation. And the humble tomato is among those vegetables that are bringing tears to the eyes of consumers. So what is leading to this surge?
Increasing fuel costs and unseasonal rains in several parts of the country have led to prices of vegetables like tomato, potato, and okra, among others, rising sharply in the past 1 month in the wholesale and retail markets across India. If we go by data provided by the Department of Consumer Affairs, the All India average monthly price of potato is at a 10-month high, and onion prices are at a 9-month high. Tomatoes, which many have termed as the new petrol, has seen prices hit a 4-year high. But why the sudden spike in prices? Unseasonal rains destroyed standing crops, leading to a surge in wholesale prices, and high fuel prices led to costlier transport charges. Prices have risen despite record crop production. Production of tomatoes, onions, and potatoes was at a record high compared to last year. Meanwhile, social media users have sprung into action with dozens of memes. Food delivery platform Zomato begged people to not mix up its name with the tomato, while Make My Trip said that tomato prices may soon exceed the cost of a trip to Manali. Bureau Report, Business Today TV.
Amid the panic and confusion over the likely cryptocurrency ban in India, the Blockchain and Crypto Assets Council has said that a blanket ban on the digital currencies will encourage non-state players, leading to more unlawful usage of such assets. The council, which is against the ban, is of the opinion that the move will adversely impact retail investors. The council has urged the government to smartly regulate crypto asset business that will help in better taxation and limit illegal use of cryptos. Crypto prices rebounded in trade today after the panic sell-off post news about India's proposed ban on private cryptocurrencies. Cryptocurrency prices had declined nearly 20% overnight Wednesday before recovering smartly amidst industry hopes that India may consider a middle path on regulation. Here's the story.
It's chaos that could very well have been avoided. Thousands of Indians went into total panic on Wednesday night when it was revealed that the government planned to prohibit all private cryptocurrencies in India. Investors flocked to their crypto wallets and began selling their holdings. A rush that led to process falling across the board, with the top cryptocurrency falling nearly 20% at the peak of the sell-off. A day later, some of the confusion seems to have settled and prices have stabilized. Leading cryptocurrencies like Bitcoin and the second largest cryptocurrency Ethereum were trading up at 45,05,002 and 3,40,118 respectively. Cryptocurrency players believe that lawmakers may ultimately opt to impose tough regulations instead of an outright ban.
we've seen this happen even in Feb 2021 when the same description, same listing was done in the list of bills to be presented, and in 2 to 3 days it normalized and it was back to normal. Need to see how how the next few days evolve. But I think right now it's also recovered a bit from the worst. I think it'll recover back. Those 1-2 days of panic selling is what we're seeing right now.
Meanwhile, ahead of the parliamentary debate, several leading voices are speaking out on the issue. Former Reserve Bank of India Governor Duvvuri Subbarao believes that India should follow countries such as the UK, Singapore and Japan that have allowed space for cryptos to operate under a regulatory radar but without recognizing them as legal tender. On his part, another former RBI Governor Raghuram Rajan says that a ban on cryptocurrencies may not work as they operate beyond the pale of regulations, adding that out of the 6,000 odd cryptocurrencies currently in existence, only a few are likely to survive. Meanwhile, Ashima Goel, a member of the RBI Monetary Policy Committee, has said that banning cryptocurrencies totally will be counterproductive, adding that the government should allow room for asset trading and tech innovation. So as cryptocurrency investors await clarity on the fate of their investments, the industry hopes to be able to persuade parliamentarians that regulation would be better than an outright ban. Until then, the fate of investments will remain in limbo. Bureau Report, Business Today Television.
Gsw Energy has stepped up its green initiatives by forming a new company for its renewable energy business. Once the reorganization is complete, all the existing and upcoming renewable energy businesses of the group will be housed under Gsw Energy Neo Limited, a wholly owned subsidiary. According to the company, the move will make it easier for it to raise funds. Gsw had issued green bonds of $707 million in May. Gsw Energy currently has 1,400 megawatts of installed hydro and solar capacity. This figure is to be increased to 17 gigawatts by 2030. Mukesh Ambani and Gautam Adani are pumping in the big bucks, pushing India's scattered renewable energy industry to the next level and hyperfueling the country's clean energy dreams for 2030. The two billionaires' moves are ringing in the next phase in the renewable energy space, with their entry signaling an inflection point for the sector. This is in fact the cover story of the latest issue of the Business Today magazine. And for more on the space, here's a slice of a panel discussion on the renewable energy sector with sector experts.
Let's talk about the two big names that are driving this agenda forward in the private space, both Ambani and Adani. Diving in here, firstly, how would you differentiate between the plans that the two giants have for the space?
I think, first of all, the amount of investment that both have committed, that's quite huge. $30 billion is almost equivalent to the amount of capital that has gone into renewable energy so far. I mean, in the last 5 years, 60 gigawatt of renewable energy has been put in the ground, and that is equivalent to around $30 billion of total investment. And that is, these two players are kind of announcing that. And the second thing that is very, very interesting about them is that they are not only focused on the generation assets, but they want to also go into the supply chain and the technology. I mean, both have announced, plans to do backward integration. Adani already has some manufacturing, and they want to kind of go backward integrated into that. They've also kind of announced their desire to invest into hydrogen electrolyzers. Reliance, on the other hand, has announced partnership with Seastal. They are kind of working on low-cost hydrogen electrolyzer. Mania has also announced investment in fuel cells, of course, gigafactories around storage and solar panels. So this is the first time we are seeing that investment is not only on the side of generation assets, which has been the main focus of the last 5-6 years, but also in the technology and the supply chain. And the second, the third aspect that comes to that is that this is going to be essential to reduce the cost going forward, because so far the cost has been coming down because of the global investments that have been going in technology. But now, when we are localizing here in India, we would expect the cost down. Where they differentiate a bit is where, at least what we see, is that Reliance has had a lot more global approach towards partnerships and announcements. and the Adani Group has had a lot more focus on regulated assets and building capacity there. And it remains to be seen how that kind of converge or diverge going forward. But this, industry being set up globally at a scale which is envisaged with the localization, that's a huge thing for India and can also give impact to us as a technology hub going forward.
And here's a look at our corporate trap. E-commerce major Flipkart has announced a partnership with leading Indian kids fashion brand Hopscotch to tap the opportunities in the segment. This partnership will put Flipkart in close competition with Amazon, which has its own brand of kids fashion wear line as well. Bharti Airtel has conducted India's first 5G trial in the 700 MHz band with mobile and telecom equipment manufacturing company Nokia. The demonstration, which was conducted on the outskirts of Kolkata, was also the first 5G trial in eastern India. The holding companies of Vedanta raised $800 million by pledging the company's shares with Madison Pacific Trust and Standard Chartered Bank. The filing stated that the promoters' companies are not allowed to raise funds by pledging shares after this fundraise. Agri-value chain startup Samunati has hired investment bankers to kickstart a new growth stage equity fundraising. The Chennai-based company has mandated Kotak Investment Banking and Incred MAPE to raise $100 million Series E round, Anil Kumar, SG founder and CEO of Samunati, told Business Today. Proxy advisory firm InGovern has charged the promoters of Asian Paints for violation of norms related to disclosure of related party transactions and conflict of interest. It has sought the removal of promoters Ashwin Dani and son Malav Dani from the board of APL. And that's a wrap on this edition of Business Today. Stay tuned to India Today News and Updates. Will continue on the other side.